So now let's talk about engagement quality reviews in a bit more detailed manner. Now, engagement quality reviews, as I told you, is responses to the adequate to address the quality risk that the firm might be facing. So, engagement quality reviews are one, to monitor the performance of the audits. Secondly, it could be used to as a remedial factor or a monitoring factor as well, to ensure that the quality concerns or the quality risk of a particular company are being regularly responded and addressed to. So, firstly, what is an engagement quality review? An engagement quality review is an objective evaluation of the significant judgments made by the engagement team and conclusion reached thereon performed by the engagement quality reviewer and completed on or before the date of the engagement report. So, engagement quality review, as I told you, are of two categories. One is a hot review, second is a cold review. Hot review is part of the engagement performance to address the quality risk that the firm might be facing before they sign the audit report. A cold review is where after the audits have been completed, the report have been submitted, the quality reviewer opens the previous year audit files to see if the audits have been completed with appropriate standards and quality have been maintained or not. So, when it comes to a quality review, definitely, as I told you, the engagement quality review partner and their team will be reviewing the audit work of the audit engagement partner and his team. But definitely, he's not going to check each and every aspect. But because if he's going to check each and every aspect, then might as well he call him as a secondary team. But engagement quality review team are specifically assigned to do specific tasks and to do specific review processes. They will be looking at only high risk areas of the client, like certain accounts which will be categorized as high risk, significant risk, fraud risk, etc., which we will discuss later in chapter 6. But to get an understanding of it, they will also be looking at certain judgments the auditors have come up, like the partners saying the provision seems appropriate. Why did they say that? Because they will have a conclusion that this is why they are saying that, oh, you know what, the provision seems appropriate. Now, provision is a judgment area. Like the partner saying that the provision is appropriate or reasonable is a judgment. They will look at the conclusions saying that, oh, you know what, these are the evidences we have looked at and we feel this is enough. These are the samples we took. We feel this is enough. Why did you take only 80% samples, or why did you take only 85% samples? You should have audited more because it's a significant area. You have to audit more. It's a non-significant area. You could have done less. Those kind of conclusions are also being questioned. Whatever the judgments, conclusions for each of the accounts they have arrived, the reviewer will look at those conclusions and question the conclusion to see if the partner is aware of those conclusions and is also reviewed the conclusions and is coming to a collaboration with respect to the reviewer. Now, the policies or procedures must be established for engagement quality reviews in accordance with the ISQM2. As I told you, the engagement quality review is required to follow a standard called as ISQM2. Now, and entities or types of entities that require an engagement quality reviews are firstly for listed entities. So any audits of listed entities, the financial statements of the listed entities, the engagement quality review have to be done. Audit or engagements for which an engagement quality review is reviewed by law or regulation. So there could be certain type of industries which requires to go through an engagement quality review as per the law or regulation. The firm determines that an engagement quality review is an appropriate response to address one or more quality risk. So they feel that the engagement quality review is an appropriate response to address the quality risk associated with the firm. So as I told you, an engagement quality review may be an appropriate response to the quality risk that could arise from the specific events, conditions, or actions. So these quality risk may depend upon either the engagement or the types of entities. So engagement means very specific to one single entity or to one single client is called as types of engagements. Types of entities, a group of entities, like it could be from entities within a specific industry, might have to go for an engagement quality review. So an EQR will be done, an engagement quality review will be done for those engagements where there are uncertainty exists that may cause significant doubt on going concern. So if there is an entity which is having a significant doubt on going concern, that engagement, that particular client might undergo a quality review as well to ensure that everything is appropriate. Because when there is significant doubt, what the problem is that how do you communicate to the shareholders in the audit report? How do you communicate to the third parties? Because everyone starts getting panic. So to ensure that those doubts are just doubts and they are not going to have a going concern, they are not a going concern issues, and there are no judgmental related issues, because the client, the management will never try to say that okay, their company is closing down. Only if is at most 100% they're sure that they're going to close down. Even if they're having loss making situations, there are a lot of issues or troubles, they will say that we are still going concern. Even if there is a huge loss, they have huge cash flow troubles, they might close anytime soon, they will still say that we are going concern, but there could be uncertainty. So those situations where they are non-going concern and they might close down very much sooner, engagement quality reviews are required. So for specific clients on those areas. Where in assurance engagements that require specialist skills in underlying a subject matter, as I told you before, companies which require expected credit loss model to be reviewed. So that expected credit loss provisions, if those entities have, specifically in financial services, those clients would require to have specialists who would value them. To give you another example is big multinational corporates are having IT systems and servers. And we might appoint an IT expert, and because we are appointing an IT expert, it might go through an engagement quality review. Or there are certain skills that's required for certain valuation, example greenhouse gas emissions, for companies like oil companies or manufacturing companies to review their greenhouse gas emissions and environmental provision. We might hire certain external evaluators who might look at who might come into the engagement, and for those engagements, to ensure that the external value or the subject matter expert is doing the work with high quality, we might appoint an engagement quality reviewer. Audits that having inspections or unremediated significant deficiencies. So last year we randomly picked up an audit client which was audited by one of the partner, and significant deficiencies were identified, but they are not remediated in the current year. So since they are still not remediated, in the current year audit also, it has to go through an EQR process. Engagement quality review have been completed. Last year, after a cold review, there was serious issues that were identified, or multiple year continuously for a particular client, serious issues are being identified. So current year, when they are auditing, hot review have to be conducted, like engagement quality review. Before the audit report are being issued, a quality review have to be completed. When unusual circumstances occur, right? For example, it's a new client disagreed with its previous auditor. A classic example I can tell you is of Byju's. Now Byju's, Deloitte have exited from Byju's. It was not a mutual agreement. They just quit. They resigned from the audit services from Byju's because previous years audits of Byju were very difficult. So they had to exit. Now there were unremediated issues, deficiencies, etc., and the current year audited financial statements are delayed, etc. So Deloitte resigned. Now I think BDO, I think if I'm not wrong, it is BDO who took the audit of Byju's. For them, it is now a significant risky audit. So for BDO who took the audit of Byju's will appoint an engagement quality review, and before they give the audit report, an engagement quality review process will go through. Only then they will give the audit opinion. So that's the situation here. So where it's a new client, for BDO it's a new client, Byju's is a new client, and previous auditor actually resigned because of disagreement. So it's a classic example. The classic example we can take is of the Byju's, where it's BDO is going to audit, and when BDO audits it, they will keep an engagement quality review. So here it's a specific client that we are talking about, or a specific engagement that we are talking about. There could be group of entities where we might so those entities which are in a specific industry, can also be required to have a engagement quality review. So let's say, for example, there is a new emerging industry that's coming up, right? To give you an example, Bitcoin industry, part of financial services. So if an audit firm is auditing a Bitcoin related company, that has to go through an engagement quality review, because it's a relatively new industry, or it's a kind of like a new space, a fintech space that auditors does not have prior experiences on, or much auditors may not have prior experiences on. So definitely, an engagement quality review would be required for such entities, etc. Entities for which concerns were expressed in communications from the regulators, like I would put it in two ways. One is that regulator themselves says that entities from this industry have to have an EQR, engagement quality review. To give an example, banking industries, financial services industries. So any banking industry or financial services industry, by nature, the industry is a risky industry. So for those, there are clear guidance from the regulators, be it the the Reserve Bank of that country, or the FRC, like the audit regulators. They clearly give guidance to the auditors that banking industries have to go through an EQR. So in UAE also there is a regulation that banking companies have to have an EQR done, which is hot review as well as a cold review, and that have to be done by which is prescribed by the UAE regulators, audit regulators. There could be cases where there are specific entities or specific industry entities, related entities, where the regulators have said that this entity are of high risky clients or high risky entities or high risky industries. So one such case again I can refer back to is Bitcoins, the cryptocurrency industries. Entities other than listed may have public interest or public accountability characteristics, like significant amount of assets are in fiduciary capacity of a large number of stakeholders, pension funds, insurance companies, etc. But they are not public limited. But still, instead of they are not public limited, they could be part of the, they have pension funds, etc. In India, in Kerala specifically, there are certain chit funds. There's something called as a chit fund. Kerala is very famous for the chit funds. Now, what chit funds is similar to that of a bank, where they take deposits and they give loans. So that particular industry is a risky. So any company that is any auditor that is auditing the chit funds, which might not be public limited companies, but they are considered as a public interest. So since chit funds act as a depository and loan giver, these chit funds have to be going through an EQR process. Companies, entities with a high public profile, right? Definitely, BYJU'S, as I said, EQR will be there because it's a high profile and a lot of issues have been raised and people are questioning BYJU'S, because a lot of students, a lot of parents have actually purchased the BYJU'S app and they might be watching them, scrutinizing them, with a large number of wide range of stakeholders, like huge number of stakeholders who are involved with this company. So because if the company does something wrong, it affects a large number of, or a huge section of people. So next, let's talk about the EQ review as a specified response. An engagement quality review is a specified response designed and implemented by the firm to address the quality risk. In ISQM 1, addresses the scope of engagements subject to an EQ review. Like we learned in ISQM 1 that there is something called as a component of quality management is engagement performance. Within the engagement performance is our EQ review. See, I've been using the term hot reviews and cold reviews. Do not use that in your examination, because those are just colloquial terms we use, and use it for your understanding. Use the term engagement quality review itself. That's a specific term that has to be used. The performance of an EQ review is undertaken of the engagement level by the EQ reviewer on behalf of the firm. So the firm will appoint a specific quality team who will do the engagement quality review before the audit report are being issued. And once the audit report has been issued, they take the past audits as part of the monitoring process of the firm. They do this review as well. The appointment and eligibility of the EQ reviewer. The EQ review's responsibility relating to the performance and documentation of the EQ review is actually what the responsibilities of the EQ reviewers are. Now, the objective of this ISQM 2 is that it's a very specific or a unique standard. It addresses the responsibilities of multiple parties. However, since the EQ reviewer is acting on behalf of the firm, the objective of the standard has been framed as the objective of the firm. So here, the entire objective of the standard is considered to be the objective of the firm. And it's a unique standard that actually focuses on this EQ review part. And ISQM 2 focuses on first the eligibility of individuals who can be appointed as an EQ reviewer. Like, can it be seniors, managers, partners? It has to be a specific senior partner. It cannot be junior partner, etc. Who can be the eligibility of the EQ reviewers? So the individuals who will be responsible for appointing the EQ reviewers, the eligibility of the EQ reviewers themselves, like who can appoint the EQ reviewers? It has to be the senior-most partner. Then, when we are appointing an EQ reviewer, who can be the eligibility? Which team gets the eligibility? Which individual gets the eligibility? Eligibility of individual who assists the EQ reviewer in performing the review. So EQ review partner will be the partner. Within him, there will be multiple teams like who will be supporting him. EQ reviewer's responsibility for performing the review, including the work of individuals assisting the review. Limitations of the eligibility engagement partner to be appointed as the EQ review partner. The engagement partner cannot come back next year saying that, okay, you know what, I have audited this firm some time, now I'll become the EQ partner. No, there are certain limitations to that. What are those limitations? Is what this particular standard tries to address. So, engagement quality reviewer will be a partner. So, an EQR will be considered as a partner, or other individual in the firm, or an external individual appointed by the firm to perform the engagement quality review. He can be a partner, or he can be other individuals as well in the firm. He can also be someone external to the entity, because an entity cannot afford to appoint a partner as an EQR, so they can go to some other audit firm and request for an EQR partner. They will assign a partner who will do the reviews. A firm must have policies and procedures, firstly to assign responsibility for appointing the EQ partners and eligibility criteria for appointing an EQ reviewer. The EQ reviewer must not be a member of the engagement team. As I told you, the EQ reviewer will be a parallel person. He will independent to the client. He will be totally independent to the client as well as to the team. He cannot be part of the engagement team. He will be independent. And there are three things that are required for an EQ partner, and they are competence, capabilities, time and authority. Competence, capability, time and authority. Second, comply with relevant ethical requirements including objectivity and independence. Third, comply with laws and regulations relevant to the eligibility of the EQ reviewer. These are the three things that is required. So the EQ reviewer has to be competent, means he has to be skilled enough. He should have enough capabilities. He should have the time and bandwidth to perform the reviews, and appropriate authority should also be assigned to him. He should comply with relevant ethical requirements, which means he should be independent of the team as well as the client. He has to be objective and independent of the team as well as the client. He should be complying with relevant laws and regulations. And whatever the laws and regulations that is relevant to the EQR reviewer, it has to be applied to him, and he should be compliant to those laws and regulations. Now, as we discussed before, can a engagement partner who was signing the audit report of a client can later be a part of an EQR reviewer? Yes, he can, but there is a condition. The engagement partner who has been previously serving as the engagement partner of a client can be an EQR partner after a cooling period of 2 years or longer if required by ethical requirements. So minimum, let's say for example, I have been auditing a client called as ABC. I am the audit partner. Now, so let me just say that Prashant is the audit partner of, I will put it as AP, audit partner of the company called as ABC. Now, I have been doing that audit partner for some time. I resigned, like I wanted to move out, so I resigned from the audit partner as an audit partner. Resign means resign from the team, like I switched. my role was removed, and then I have to wait for 2 years. So only after 2 years I can be the EQR partner of this same client. So till then I can do audit of other clients. I can be a partner of other clients. But if I have audited the client ABC for some time, then I have to wait. Previously, if I had audited the ABC for some time, then I have to wait. Not some time, even if I have audited for once, I have to wait. Wait for 2 years to become the EQR partner for this particular audit client. That is what is the requirement. And then when we talk about the independence, similar to that of an engagement partner, how he should be independent, what all threats that could affect the engagement, that could affect the objectivity of the engagement partner. Similar threats could affect the objectivity of the EQR partner. So the EQR partner should be objective and independent. So all the rules and regulations that apply to the engagement partner will also apply to the EQR partner, but there could be additional requirement depending upon the client to client or firm to firm. Like certain firms might incorporate additional threats, or identifies additional threats, or incorporates additional ethical requirements for an EQR partner to be called as independent. So those independence requirement should also be met, and to give you a simple example, the EQR partner cannot have his close family related to the client that he is going to do a review of. He cannot have investments, shares investments in that client. He cannot have any kind of self-interest threat for that particular client. Those kind of threats would apply for the EQR partner as well, similar to that of any other team member.